Have you ever wondered why one of the richest men in the world, Warren Buffett, is holding on to a record amount of cash right now? What's going on? What does he see that others don't? In this video, we will uncover the reasons behind Buffett's cautious approach and why holding cash in today's economy could be the most brilliant move you can make. Before we dive deep, don't forget to hit that subscribe button and give this video a thumbs up. It really means a lot to our channel, helping us bring you more valuable content like this. Let's get started. Warren Buffett, the Oracle of Omaha, has long been known for his investment prowess. Yet one of his most consistent strategies involves an approach that seems almost counterintuitive for a man famous for investing holding cash. Historically, Buffett has emphasized the importance of having a cash buffer for both personal and business purposes. In his view, cash isn't just money sitting idly. It's flexibility, insurance, and an opportunity for future gains. Over the years, his strategy has evolved to reflect this fundamental principle, especially as markets become more unpredictable and global uncertainties rise. As of the most recent reports, Buffett's Berkshire Hathaway is sitting on over $150 billion in cash, an amount that exceeds what most companies or even nations hold. Buffett has repeatedly stressed the importance of liquidity. In volatile times, having cash on hand allows for three key benefits. 1. Protection against uncertainty. While the stock market can be volatile, cash acts as a stabilizer. It ensures that no matter the economic climate, Berkshire Hathaway can continue operating without resorting to desperate measures like selling undervalued assets. 2. Opportunity to pounce on deals. Buffett is a long-term value investor. When opportunities arise, whether from market downturns, recessions, or sudden corrections, having a cash reserve allows him to jump on great investment deals that others may miss out on. He's often said, "Be fearful when others are greedy and greedy when others are fearful." Holding cash provides him the ammo to act when others can't. 3. Avoiding debt. Warren Buffett avoids unnecessary debt like the plague. Holding substantial cash reserves reduces the need for Berkshire Hathaway to borrow, even when making large acquisitions. This gives the company a competitive edge, as they aren't beholden to interest rates or debt obligations that might impact their future decisions. To understand why Buffett is holding a record amount of cash now, we must examine the current economic climate. We are living through unprecedented times: high inflation, market volatility, geopolitical tensions, rising interest rates, and potential recession fears. Inflation and uncertainty. Inflation has been a significant concern for investors over the past few years. Rising prices erode purchasing power and can make traditional investments less appealing. Buffett has often referred to inflation as a tax on savers, but the way he's structured his cash holdings is more nuanced than simply sitting on money and watching it depreciate. Buffett understands that while inflation reduces the value of cash over time, the alternative, investing heavily in an overvalued market, could result in far greater losses. The current climate is one of uncertainty. Stock markets are reaching historical highs, but many analysts argue that valuations are inflated and a correction could be imminent. Holding cash in such a scenario isn't about being passive. It's about positioning oneself for action when the tide turns. Market valuations. Buffett is known for his disciplined approach to value investing. His strategy focuses on acquiring high-quality companies at reasonable valuations. Currently, many market analysts argue that equity markets are overheated, with valuations far exceeding historical norms. Buffett has famously said, "Price is what you pay, value is what you get." He is unwilling to chase overpriced stocks, preferring to wait for opportunities to buy at a discount. The high market valuations across sectors have kept him from making significant investments recently, thus building up his cash reserves. By holding cash, Buffett can bide his time until the market offers a more favorable entry point, where he can invest with confidence in undervalued opportunities. Another factor influencing Buffett's decision to hold so much cash is the growing geopolitical instability. From trade wars to global supply chain disruptions and the ongoing conflict in Ukraine, the world is becoming an increasingly uncertain place. Buffett, always thinking long-term, understands that these events can have significant, lasting effects on the global economy. Uncertainty breeds market volatility, and during such times, companies with strong cash positions can weather the storm. While others may be forced to sell assets or take on debt during downturns, Berkshire Hathaway's cash reserves act as a fortress. Moreover, geopolitical events often lead to market corrections or dips, allowing those with liquidity to capitalize on undervalued assets. Buffett's large cash position allows him to act swiftly when opportunities arise, while also protecting his portfolio from short-term shocks. Warren Buffett's move to hold a record amount of cash is not just a defensive posture, but a strategic one. Cash provides flexibility in times of uncertainty, and in today's volatile environment, that flexibility is invaluable. But what exactly makes cash such an appealing asset in today's context? Liquidity is power. When the market takes a downturn, those who have cash can take advantage of lower prices. Buffett's vast cash reserves put him in the ideal position to purchase high-quality companies at a significant discount when market corrections happen. Avoiding high valuations is another reason. In many sectors, stock prices are currently at inflated levels. Buying into an overvalued market could lead to substantial losses. By waiting for the right moment, Buffett ensures that Berkshire Hathaway is not overpaying for its acquisitions. No debt pressure is also a key factor. While many companies borrow heavily to fuel expansion, Buffett avoids debt. Having a large cash reserve means Berkshire can make significant acquisitions without taking on loans or facing debt pressures. And finally, staying independent. Cash gives Buffett the ability to remain independent of external financing, allowing him to act swiftly when others are weighed down by financial constraints. Buffett's massive cash pile has led many to speculate on what his next move will be. Historically, Buffett has used these large cash reserves to make major acquisitions during economic downturns, famously striking lucrative deals during the 2008 financial crisis. With market volatility expected to continue, Buffett is likely positioning himself to capitalize on future buying opportunities. Whether it's acquiring an entire company or making strategic investments in undervalued sectors, Buffett's cash allows him to act decisively when the time is right. As history shows, when Buffett makes his move, it's usually big and immensely profitable. Warren Buffett's cash strategy isn't just a lesson in patience. It's a masterclass in preparedness and opportunity. For the everyday investor, there are several key takeaways from Buffett's approach to holding cash. Patience is a virtue. Just because the market is active doesn't mean you need to be. Sometimes the best move is to wait for the right opportunity. Buffett's discipline in holding cash while waiting for value opportunities is a powerful lesson. Cash as an opportunity fund is another important concept. Rather than seeing cash as an idle asset, view it as a tool for future investments. When markets correct or downturns happen, those with liquidity are in the best position to profit. Prepare for the unexpected. Markets are unpredictable and the economy can change rapidly. Having a cash buffer provides security and ensures that you won't need to sell assets at inopportune times. Avoid overpaying for assets. Buffett's refusal to buy into an overvalued market is a key principle of value investing. Stick to your valuation principles and don't chase investments just because others are. As we've seen, Warren Buffett's decision to hold a record amount of cash is driven by a combination of market conditions, economic uncertainty, and his value investing principles. Buffett isn't afraid to go against the grain and hold cash, while others invest in overpriced assets. He's waiting for the perfect opportunity, and when it arrives, he'll be ready to act. So what can we learn from Warren Buffett? Hold cash not because you're scared, but because you're prepared. Prepared for opportunities, prepared for downturns, and prepared to make your money work for you when the time is right. Don't forget to subscribe to our channel for more insightful videos like this. It truly means a lot to us and helps us continue providing you with valuable content. Thanks for watching, and stay tuned for more wisdom from the world's greatest investors.